If you thought about Mark Zuckerberg on the fourth quarter call a couple of months ago, he felt, if you were to think of one word, Andrew, it was vulnerable. Like Facebook, Meta looked vulnerable to TikTok. He just sounded, he sounded flat-footed. He didn't sound excited. He sounded almost worried. Whereas this quarter, we got an entirely different Mark Zuckerberg, sort of the Mark Zuckerberg we're used to of, we know how to make these transitions. We've done this before. He never mentioned the word TikTok himself. He just had an air of confidence that was simply missing last quarter. And I can't completely explain it, but it was an entirely different Mark Zuckerberg. And I think his body language has a lot to do with why the stock is higher today.
And you think that body language is a reference to just basic confidence in the future of the company and the business?
Yeah, I think they have greater confidence that while TikTok is certainly a major threat, that they are growing Reels. They're investing in AI to make so it's not just about your friend's feed. It's more about any piece of content. The way TikTok is less about who you follow and more just about servicing great content. They are clearly leaning into that aspect of technology to change Facebook and Instagram for the future. But I also think that, the other thing that investors are really excited about is, that they're sort of understanding that they're not just, this is not a black hole tied to the metaverse, that there is sort of rational investor discipline, which you didn't hear about on the last few calls. It was, hey, we are going at this huge opportunity. We're going to spend aggressively. This quarter, it was, we're going to actually cut back on some of those investments because our revenue growth is slowing. We're facing headwinds economically, geopolitically. And that, it reminds me back when Ruth came in and they started making some cutbacks to some of their investments that were more speculative. Investors love that. And I think investors love that sort of body language from Dave Wehner today.
Rich, you just mentioned Ruth and you mentioned Google. They just had their earnings report the day prior, and there were a lot of concerns about the advertising piece on YouTube. Make the distinction between what you think's happened on YouTube in the past quarter and what's happening on Facebook.
The ad market is slowing down radically. This is not about Facebook crushing advertising numbers. I mean, you just said it. The bottom end of their range is a decline of 4% in revenues year over year. The ad market is challenged. I mean, we're looking at increasing inflation fears, recession possibly in Europe and in the US. Like, there is definitely concern for the ad market. This is just expectations for Facebook were so low, less so about just the trajectory of advertising and more just about getting crushed by TikTok. I mean, the fear coming out of last quarter was they can't figure out how to keep up and TikTok is just eating their lunch. That is something where you feel like, okay, we can't fix the economic environment, the geopolitical environment. But as you move into 23 or 24, Facebook will grow again. And when you look at its valuation, this is trading at mid-teens earnings multiple on 23, even with slower growth because of advertising that Google talked to as well. I think investors are going 175 was just too cheap. This has just been too penalized.
Shepard Smith here. Thanks for watching CNBC on YouTube.